Hello, I'm Amy Borrus, and I'm the Executive Director of the Council of Institutional Investors. I want to talk to you about insider trading and something called 10b5-1 trading plans. They're an important part of healthy and fair capital markets. CII is a nonprofit, nonpartisan association, and our members include major long-term share owners with a duty to protect the retirement savings of millions of workers and their families. CII educates its members, policymakers, and the public about the value of good corporate governance, which refers to how major corporations are governed. We also advocate on behalf of our members for improving corporate governance practices. Much of our advocacy work is directed at the Securities and Exchange Commission, the SEC, and at Congress. One focus of our advocacy is the SEC rulemaking proposal on insider trading. Now, insider trading is the purchase or sale of a company's stock by individuals with access to confidential information about the company. Taking advantage of that information when buying or selling stock is a federal crime. And it also lets insiders profit unfairly at the expense of other shareholders like you. Most corporate officers and directors possess confidential information and are often paid in company stock. And because of that, the SEC in 2000 established Rule 10b5-1. That rule lets executives, directors, and other insiders set up trading plans to buy and sell their company stock in a way that shields them from violating the insider trading laws. These plans set advance directives about when an individual buys or sells company stock at a specific price, amount, and dates. 2008, CII members approved a best practice policy about Rule 10b5 plans after a number of reports about practices involving insider trades in company stock that seemed inconsistent with the spirit of the rule. Those practices included sales of stock soon after the plan's adoption, frequent amendments and terminations of the plans, and a lack of transparency surrounding plan adoptions, amendments, and terminations. CII believes these types of activities may indicate that confidential information was a factor in the decision to establish and trade using a 10b5-1 plan. In 2012, after continued evidence of insider trading abuses, CII submitted a rulemaking petition to the SEC. That petition asked the SEC to consider closing loopholes in Rule 10b5-1 plans. Specifically, we asked for 3 revisions. 1, company insiders should be prohibited from adopting multiple overlapping 10b5-1 plans. 2, a delay should be required between the adoption of the plan and the first trade under the plan. And 3, provisions of 10b5-1 plans should be more transparent. Since 2012, CII has actively advocated for the critical reforms at the SEC and Congress. In 2019 and again in 2021, the House of Representatives passed legislation with bipartisan support that would have required the SEC to study Rule 10b5-1 plans and propose a rule to make the changes our 2012 petition requested. In January 2022, the SEC, under Chair Gary Gensler, issued a proposed rule that incorporates many of the recommendations CII has been championing for almost 10 years. We strongly support the proposal, and we are urging the SEC to approve a final rule promptly. When it does, the result will be fairer markets that benefit all market participants, including you. I'm Amy Borrus for CII Speaks. Thanks for watching.